Yeah. PJ trades here to break the block beast. Ninja through the charts, east to west feast. Fair value gaps, call it every.
And I'm done, boys. GG's. You can hold your trade, stop the break even. Never fade me, dude. Never fade me. Hello, my beautiful traders. It is your boy PJ Trades, and we are back today with another trade review. The markets are finally moving. For the last 2 weeks, I don't know about you guys, but the market has been super stagnant. East to west price action, not a lot of clear moves to trade, but this week is a whole nother story. We have already caught 119 points on Tuesday, and we just caught another high 119 points on Thursday, 5/29/2025. So today we're going to break down today's 119 point continuation short trade that we took today in the premium community. So let's just get right on into it. At the open, I'm working on a 5-minute time frame here if you guys want to play along and study along with me. And again, all I ask is that you like and subscribe to the channel so I can continue to give you guys free educational value. So the market opens up just booming to the downside here. We just end up selling off at the open about 173 points. And then we bounce and retrace into this 5-minute fair value gap. Now, I'm going to delete everything and walk you guys through why I was liking this price action for lower. In order to do that, I need to show you guys what I saw on the 1 hour time frame. Okay, so as you guys can see here, we have a 1 hour inverted fair value gap here. You can see in the yellow box. That is a 1 hour inversion. We also have a 1 hour inversion here. So we've now disrespected two bullish PD arrays on the move down, which tells me that the bulls don't have much control and bears are in control of this market. Now, what I also notice is that we have this beautiful external low right here as sell side liquidity. After we have two inverted fair value gaps, especially on a higher time frame like the 1 hour, I am still looking for downside. Now, a lot of you guys might ask, well, Paul, why would you not be looking for a bounce in this region here on the 30-minute? This is the last presented fair value gap on this leg. This is a 30-minute gap. It's the last line of defense. Why on earth would you not be looking for a reversal here? The reason being is what I just said. We flipped two 1 hour gaps. We're disrespecting both of them, and we have a clean external low to draw into. So once we get that last inversion here, I'm seeking lower prices. And this is how I played it. It's actually pretty simple. The market, as you can see, in this zone here, this is that 30-minute last first presented fair value gap. The market bounces from the zone. And what it does is it bounces into a 5-minute bearish fair value gap here. This is a 5-minute bearish fair value gap. Okay. And what I'm looking for is a rejection out of this 5-minute gap, because when I trade the continuation model, it works beautifully when we're delivering out of a PD array and we have a target either below or above to trade with. So in this example, we're going to be taking this trade out of a 5-minute bearish fair value gap, targeting lower prices. Okay. So this part is where the patience needs to be practiced, because a lot of you guys will end up making this mistake right here, taking a short trade at a low like this, which I don't recommend one bit. And you end up getting, and like maybe you're running a stop like this or whatever you're running, but you're going to end up getting stopped out in this situation. Okay. What you needed to have done is just wait for the market to pull back into some sort of bearish PD array, watch how price reacts inside that PD array, then take a trade targeting opposite draws on liquidity. Now, important with this model, we're in the 5-minute gap, but I'm not trading on a 5-minute time frame. I'm looking for the market to be respected inside of this gap on the 5 minute. I am now going to fine tune my entry on the 1 minute. Now, on the 1 minute, on this little reversal here, we leave behind a bullish fair value gap on the 1 minute. So now we have a bullish fair value gap on the 1 minute. At this point, guys, we have framed the trade idea already. We're already done framing. We're looking for lower prices, okay? Our overall draw on liquidity is way down here. We have disrespected 2 bullish 1 hour fair value gaps. And now we are looking for a rejection model / continuation model, continuation inverted fair value gap model towards lower prices. What we're doing here, guys, is we're trading with the trend. We're not looking for a reversal mod here. We're leaning on the shorts because we're still respecting bearish order flow. In order for me to want to be bullish this market here, we're going to need to flip a higher time frame gap. And that gap would end up being this massive 15-minute gap here, which is a tall order to ask, really. We're going to need a ton of buyers to step up to flip this gap to go higher. So at this point, I think that's a big ask. We still have a draw lower down into here, and I'm looking for a continuation model. So we get a rejection out of the 1 minute. We get a 1 minute bullish FEG, and the next part is discipline. You gotta wait now for this market to flip this 1 minute gap to the downside in order to give you an inverted fair value gap continuation model. One of my favorite models I teach here on the channel and in my premium education and premium Discord. Now, we do get an inverted fair value gap, okay? This right here is the inversion, okay? Now, full transparency, we take a break-even trade here because I entered a bit early on this candle. I didn't like the candle closure. It technically is an inversion, but I didn't love the strength of it. So I took a quick break even and I reassessed. Market then pulled back, and then finally we got this 1 minute closure. That to me confirmed that this little 1 minute inverted fair value gap was going to hold. Market then came back up into that inversion on this next candle here. We executed a short, okay? We ran stops above the manipulation swing high here, and we were targeting down into these lows. Now, we took 119 points on this trade, so I'll show you where 119 points is. It's right here, okay? And now we're framed in the trade, guys. Our stop loss is above this manipulation, which is also a 5 minute bearish FEG. Why is the stop here? The stop is here because it needs room to breathe. Honestly, this market can come back up here, reject, go lower. I need to give this ample amount of room for the stop to make sense. So in this situation, I'm putting it above the 5 minute bearish fair value gap. If this 5 minute bearish fair value gap is going to fail, we're going to get stopped. Okay, so we're trusting in our model, but that's the last line of defense. We need this to hold. So we're in the trade here. Stops above the swing. TPs are down here. Overall, TP would be down into here. And then we execute the trade model, man. We execute the trade, and the trade ends up doing fantastic. At this point, once we take this swing low here, chat, we go fully break even on the trade. At that point, I believe we are about 20 points in profit. My rule of thumb is 20 to 30 points stops the break even. So we're in break even here. This trade's risk-free, and it ends up delivering the full TP at 119 points right there. So that was it, guys. We were waiting for a continuation inverted fair value gap model in a trending environment. And this is why I say, if you guys can get past, I'm going to go full screen here. If you guys can get past trading crappy market environments, you are going to excel so much in a trading environment that is trending like today. We're trending lower. We catch a trend model. These are my favorite types of trades. I mean, honestly, these are some of the best trades to take when you're in a trending market. You get an inverted fair value gap. You still have draws lower and or higher, depending on what direction you're trading. And you could straight up trade an inversion into a draw on liquidity. Now, I believe later in the session, we finally end up getting the full draw on liquidity here. Let's see here. I think it took a while, but this market ended up delivering the goods later in the session, which was this overall draw on liquidity. And I knew that too. I was calling out to my chat after we took our trade later in the session. I go, guys, the draw on liquidity here is very obvious. It's this external low. And yeah, it just took a while from here, but we were out at 119. That's plenty of money, especially when you're copy trading. But the overall draw on liquidity, as you can see, was this external low. The market wanted to sweep this low to possibly make a new move from there and grab orders and liquidity. So that is today's trade review, guys. Fantastic. 119 points on the trade setup. We're currently up over right around 250 points this week on 3 trading days. Really on 2 trades, we made most of our money. And we're heading into Friday really with, you know, a lot of money in the bank. And now we can kind of maybe get a little bit aggressive, but I don't want to because Fridays statistically are not my best trading days. But, you know, I will not be risking, you know, that much money on a Friday anyway, but I might get a little aggressive because we have so much money in the bank already. So that is today's trading review. I hope you guys are enjoying these trading reviews here on the PJ Trades channel. Again, leave me a comment, like, and subscribe, and I'll keep giving you guys these free trade reviews. And I hope you're gaining value and getting better at day trading. Have a great and wonderful Thursday night.